My name is Jembe Ndizita and you're watching Business News coming to you live from our review studio. Good morning. The Central Bank of Nigeria is expected to cut the benchmark interest rate as the Apex Bank enters a renewal phase of monetary easing to boost domestic productivity. Analyst consensus indicated that the Apex Bank will, at the end of its two-day meeting starting today, reduce the benchmark interest rate by at least 50 basis points to 26.50 points. The Monetary Policy Committee is the highest policy-making organ of the Apex Bank. The interest rate will be core of discussions at the meeting. The CBN governor-led MPC traditionally provides monetary policies and benchmarks which determine the direction of the financial services sector and the economy to a large extent. At its last meeting in November 2025, the MPC retained the monetary policy rate at 72%, halting the trend that started with a cut from 27.5% in September 2025. Economic Intelligence Report and think tanks, which had previously correctly tracked the Apex Bank's position yesterday, were unanimous that the MPC could restart its policy easing stance, given the improvement in the macroeconomic environment. The Petroleum and Natural Gas Senior Staff Association of Nigeria on Sunday renewed its call for the federal government to divest majority shares in the nation's state-owned refineries, urging authorities to adopt the Nigerian LNG model by selling at least 51% equity to core investors. Under this arrangement, the government will retain a minority stake while selling a majority shareholding to core investors. The national president of Pengasan and the Trade Union Congress, Festus Osifo, made the recommendation when he featured as a guest on Politics Today on Channels Television. Osifo said the union consistently canvassed partial privatization of the refineries over the past 2 decades, insisting that government ownership structure has hindered efficiency and commercial viability. He said Pengasan has always advocated in the last 20 years that the government should bring about the NLNG model in the refinery by taking a minority stake in the refinery and sell the majority stake. According to the union, divesting majority shares to private refiners would depoliticize refinery management. The Nigerian equities market extended its bullish run week on week as sustained demand across key sectors lifted the benchmark index further into record territory amid rise in global oil prices. The market recorded the highest week-on-week gain as investors gained over 8.137 trillion naira from their investment listed on the Nigerian Exchange Limited. A review of the market performance last week showed that the NGX market capitalization, which represents the value of equities, rose significantly to record the highest this year at 126.14 trillion naira from 117.027 trillion naira the previous week. In the same vein, another stock market performance indicator, NGX All Share Index ASI, climbed higher by 6.95% to close last Friday to 194,989.77 points from 182,313.08 points the previous week. Analysts noted that this reflects growing investor confidence underpinned by selective institutional accumulation and renewed positioning in fundamentally strong counters. Meanwhile, in the broader macro environment, global oil prices provided additional sentiment support. Brent crude traded above $71 per barrel, while WTI hovered near $66 amid renewed geopolitical tension in the Middle East. Analysts noted that heightened concerns about potential supply disruptions around the Strait of Hormuz sustained the geopolitical risk premium in oil markets. For Nigeria, firm oil prices remain a key positive factor, supporting fiscal stability, expectations, and enhancing foreign investor sentiment toward the domestic equity market. Still talking business news, the federal government has formalized the launch of a $50 million Impact Innovation Fund to support Nigeria's startup tackling critical social challenges, following agreement signed between the Nigerian Sovereign Investment Authority and the Japan International Cooperation Agency. The signing ceremony held at the Ministry of Budget and Economic Planning in Abuja covered the grant contracts for the project for the development of supporting environment of startups addressing social challenges. Under the arrangement, JICA will provide $14 million in grant support, while NSIA will contribute up to $20 million to match the grant as part of the $50 million Impact Innovation Fund. The fund is structured as an onshore public vehicle and will combine financial support with a technical assistance to help startup refine produce, scale operations, and expand into new markets. Speaking at the event, NSIA Managing Director and Chief Executive Officer Aminu Umar Sadiq described the fund as a significant step for the startup ecosystem. He said the collaboration with JICA underscores Nigeria's commitment to entrepreneurship, inclusive growth, and sustainable development. The ambassador of Japan to Nigeria, Suzuki Hideo, said he was very pleased that the grant contract for the project for the development of supporting environment for startups toward addressing social challenges. Health inflation rose sharply to 30.35% in January 2026, highlighting sustained pressure on households as the cost of drugs, hospital treatment, and other medical services remain elevated despite a moderation in headline inflation. The latest Consumer Price Index report released by the National Bureau of Statistics showed that while overall inflation is to 15.10% year-on-year in January 2026, health inflation accelerated significantly from 20.09% record in January 2025. The report stated that the Consumer Price Index declined to 127.4 in January 2026 from 131.2 in December 2025, reflecting a slowdown in the overall price rise. However, the health component continued its upward trend. An analysis of the index figures shows that the health index rose from 109.4 in January 2025 to 140 to 40.6 in January 2026, translating to 30.35% year-in-year increase. In contrast, the all items index increased from 110.7 points in January 2025 to 127.4 points in January 2026, corresponding to an annual inflation rate of 15.10%. This indicates that health inflation was more than double the headline rate, showing the disproportionate impact of rising medical costs on households. And that is it on business news. Stay tuned for news track at 2 p.m. But before then, enjoy